Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's update our view on the gold market. So gold right now is coming in the center of all events, just because this is the type of the market that actually is absorbing the all geopolitical news that we've got. So not only in the situation in Africa that was just a few days ago, now it's downgrading by the Fitch rating agency, United States credit rating. So all the stuff might impact on the gold, and that's why in the current circumstances it's very difficult to make any forecasting and actually to trade this market, because it's actually in any moment you could get another news, and it's all that you have prepared and were preparing for this could just be vanished totally. So still, just based on the technical picture, it seems that market keeps the bearish context, I mean in the short term, because in the daily chart you could see the trend remains bearish. Despite all volatility that we've got on African news and so on, market still returned right back down. And this price performance makes me think that probably we still should reach our target around 1930 area. Another moment that is very good here is that take a look that the downward action is a bit choppy. Yes, we have some days of the sell-off that is happening gradually, but at the same time on the next few sessions market played back the most part of the previous collapse. So it's very deep retracements, approximately the 618 level, which is actually typical for the gold. But in the context of all downside action, action becomes choppy, and this is very good for the bullish reversal pattern. It's how it should be, and that's the good sign that right at the point of right arm's bottom, as we suggested, there's a good chance that market indeed will show the upward reversal. So let's keep watching. On the lower time frame and full time frame chart, take a look what we have. That was a rally on Africa. Collapse has happened on actually rising of the interest rate yields in the United States, because this is nominal yields, and as you know, this is not good sign for the gold, just because the real interest rates is rising in the terms when the nominal rates are rising, because inflation more or less stable, rising of nominal rates increase the real interest rate, and that's also always the bearish factor for the gold, and that explains this collapse. From the technical point of view, this is a good sign for the bears, just because take a look, market totally erased this previous rally, overlapped it, and now shows minor bounce. Very interesting and important thing is the structure of the swings here, and actually could let us to control the situation. Why? Because if we'll take a look at the structure of the swings, you could see that was initial downward action, pullback, retracement, actually continuation of the previous momentum right there, inability of the market to keep this previous tendency, bulls have capitulated here, collapse has happened. I am speaking only from the technical point of view without mentioning the reasons for this. So it means that downside extension starts forming. This was a continuation of this AB leg, very strong and fast. Major retracements, ABCD shape after the OP, and that has to be continuation of this one and this one. So other words speaking, that has to be another extension to the XOP. What does it mean to us? It means that since the major retracement out of the OP already is done, market should not show any similar retracement right here if market indeed bearish. So we could accept some minor pullback here, some minor bounce, it might happen, but not this kind. We could, normal market performance, normal market behavior has to show very small retracement here, and then normally if the market is still bearish and we are correct in our suggestion, it should keep falling to the XOP in 1925, 1930 area. It's right there. So it means that on hourly chart, take a look what we have. Market has closed the gap, so the opening gaps. You can see its lows overlap this top, and its actual gap is closed right now. But this is very typical for a stock market, by the way. When on an opening of the session, market creates the gap, close the gap, but remains above the gap. So it not, because it might close in a different way. So it could just turning down, start dropping, closing the gap, and return back to the lows. It's continuation of this one. But take a look what we have. Market closed the gap, but shows the pullback and stands above it. This is a very short-term bullish sign. And from that standpoint, I'm not excluding that, well, market could form another minor ABCD pattern here. So this scale, as you could see, significantly smaller than this one. This large major retracement. That's minor retracement. It's at 618. Maybe it even will not reach the 1960. But it might be some a bit deeper retracement here. And if you're considering taking the short position, it makes sense to wait. This market could show this probable upward continuation, maybe, or something of this kind. It's just because of the response of the gap. So that's actually what we have from the gold. As a bottom line, we still keep the bearish context, but for a position taken, either split the position, as we always talk about this, take some minor part here. If market will show this ABCD back to the 1960, could take the risk, or just trying to catch the profit points for reversal, something of this kind. But currently we do not see any signs that gold has, well, erased the bearish context and something has changed, so we are still watching for this target.